This is going to be an interesting comparison here. I'm going to answer which stock is the better buy, the legacy automaker Ford or the up and coming power generator plug-in power. I'm going to answer that question looking at a few different metrics, so let's get right into it. Starting with the price change in 2022, Ford stock was down 44% while plug-in power saw its price fall 56.18%. Moving on, let's look at revenue for the trailing 12 months between these two companies, and it really highlights the difference in scale. Ford's revenue in the trailing 12 months is 151.74 billion, getting a nice boost in the middle part of 2022 as consumers were willing to pay higher prices for cars than they were typically used to. I know there was some people quoting MSRPs, sales prices at dealerships that were $10,000 above MSRP for a $30,000 car. Of course, all of this was great news for a car manufacturer and seller like Ford. Plug-in power, meanwhile, was also experiencing very nice revenue growth as the electric vehicle industry is expanding. It's going to need charging stations, and plug-in power is benefiting from that. Trailing 12 months revenue of 642 million is growing very nicely. I expect plug-in power growth to far outpace Ford's growth. Ford is probably going to grow revenue at less than double digits over the next its decade, I would say. Meanwhile, plug power, I wouldn't be surprised if it grows revenue at a compound annual rate above double digits for the next decade. Next, I wanted to look at net income for these two companies. And Ford has typically generated very good profits in the billions and billions of dollars. However, in its most recent quarter, it lost 827 million as a result of some non-cash expenses. Meanwhile, Plug Power has yet to achieve consistent profitability, net income going downward, and it lost 170 million in its most recent quarter. I think it will be a reasonable amount of time before Plug Power reaches profitability. It's still investing in its growth, and that's going to take a while for it to reach the kind of scale to at that point say, okay, we're done with our growth ambitions. Now it's time to turn to profitability. Next, I wanted to look at cash flow from operations, and I looked at the trailing 12 months. And Ford has, of course, much better cash flows here. Look at this, 9.2 billion in cash flow from operations in the trailing 12 months. Although that is coming down from the peak during the first couple of quarters in 2021, where it had nearly 30 billion in cash flow from operations, down to 9.2 billion. I suspect this will continue to come down as those favorable conditions for car sales continues to ease up. It's unrealistic to expect cars to be selling at $10,000 above MSRP. Typically, you go into a dealership for a $30,000 car, they'd be willing to sell that to you for $25,000, $26,000. But in recent years, since the outbreak because of the supply chain shortages, dealerships were able to charge people $10,000 above MSRP. So that's unsustainable, and we're seeing that reverse, and you can expect to continue to see that reverse over the next several quarters. Meanwhile, plug-in power just heading in the wrong direction in terms of cash flow from operations. The more it grows, the more money it loses in terms of cash flow from operations. 531 million negative over the recent 12 months. So let's compare the two on valuation, and because Plug Power is not profitable and is losing cash from operations, I chose to use the price to sales ratio to put the two on similar footing here. Ford is trading at a price to sales of 0.347, plug-in power trading at a price to sales of 14.36, both of which their valuation is down considerably from their highs. However, plug-in power is trading at near over 40 times the valuation of Ford here. I mean, yes, the company is going to grow revenue much faster than Ford is. That's a given. No one's going to argue with you against that. Plug-in power is going to grow faster. However, will it ever achieve profitability? I don't know if it'll ever reach a scale to where it becomes profitable. Will it ever be positive cash flow from operations? that remains to be seen. So plug-in power still has a lot to prove, while Ford at least has demonstrated for decades that it can produce and sell cars at a profit, right? It has had its issues. So it's not like Ford is not vulnerable. And I always say investing in car stocks, manufacturing car manufacturers and sellers, sketchy idea in my opinion. I'm not in favor of that idea, but I'd rather go to answer which one of these is the better buy. I'd rather go with Ford because at least it's proven that it can deliver billions of dollars in profits and cash flow. So there you have it. Ford is the better stock to buy. That's all I've got for this video. Thanks for tuning in. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.